Now that the end of the year is just around the corner, you might be looking to make a donation to one of a few charities. One of the questions you will likely have is whether or not the donation is deductible to you.
Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
If you enjoy making donations to charities and having the benefit of a tax write-off for your contribution, it's important to understand the tax provisions that apply to these donations, especially contributions of clothing, household items, and monetary giving. So let me first discuss the rules for clothing and household items. Donations of items have specific rules depending on the type of item and their value. To be deductible, clothing and household items donated to charity generally must be in good used condition or better. Household items include furniture, furnishings, electronics, appliances, and linens. Any donations of automobiles, boats, and airplanes require special reporting. If you donate a motor vehicle, boat, or airplane, it is usually limited to the gross proceeds from its sale. This rule applies if the claimed value is more than $500. Form 1098-C or a similar statement must be provided to you by the organization. For all donations of goods, ask the charity for a receipt that includes their name, date of the contribution, and a reasonably detailed description of the donated items. If a donation is left at a charity's unattended drop site, keep a written record of the donation that includes this information, as well as the fair market value of the property at the time of the donation and the method used to determine that value. Additional rules apply for a contribution of $250 or more. A properly completed Form 8283 must be submitted with the tax return if the amount of your deduction for all non-cash contributions is over $500. Next, here are the guidelines for monetary donations. To deduct any charitable donation of money, regardless of amount, you must have a bank record or written communication from the charity showing the name of the charity and the date and amount of the contribution. Bank records include canceled checks, bank or credit union statements, and credit card statements. Bank or credit union statements should show the name of the charity, the date, and the amount paid. Credit card statements should show the name of the charity, the date, and the transaction posting date. Donations of money include those made in cash or by check, electronic funds transfer, credit card, and payroll deductions. For payroll deductions, the taxpayer should retain a pay stub, a Form W-2 wage statement, or other document furnished by the employer showing the total amount withheld for charity, along with the pledge card showing the name of the charity. These requirements for the deduction of monetary donations do not change the long-standing requirement that a taxpayer obtain an acknowledgement from a charity for each deductible donation, either money or property, of $250 or more. However, one statement containing all of the required information may meet both requirements. Now, here are a few reminders about the donations that you'll be making. Contributions are deductible in the year made. Thus, donations charged to a credit card before the end of the year count for that year, even if the credit card bill isn't paid until later. If checks are postmarked by December 31st, they still qualify for the deduction as well. Make sure when you're making a donation that it is to an IRS-approved charity. To verify if the organization is qualified, search the IRS website for Exempt Organization Select Check. Churches, synagogues, temples, mosques, and government agencies are eligible to receive deductions deductible donations, even if they are not listed in the database. For individuals, only taxpayers who itemize their deductions on Form 1040 Schedule A can claim deductions for charitable contributions. This deduction is not available to individuals who choose the standard deduction. A taxpayer will have tax savings only if the total itemized deductions, mortgage interest, charitable contributions, state and local taxes, etc., exceed the standard deduction. Use Form 1040 Schedule A to determine whether itemizing is better than claiming the standard deduction. It's important to keep good records and receipts for all donations in the case of an audit, and you need to prove the validity of your deductions. People often ask about a tax deduction for time they volunteered with a nonprofit organization. Unfortunately, your time is not considered deductible on your return. However, you can get a write-off for miles driven to the organization if applicable. With many victims of the most recent natural disasters still dealing with the devastating effects on their homes and businesses, good-hearted people are looking to donate and help in any way possible. The IRS has information to help you prevent yourself from being a victim of criminals who want to take advantage of charitable people. If you're currently searching for a way to donate, there are things you should be aware of in order to avoid fake charity scams. While there has been an enormous wave of support across the country for victims of hurricanes, floods, and fires, you should be aware of criminals who are looking to take advantage of this generosity by impersonating charities to get money or private information from you. Fraudulent schemes may include contact by telephone, social media, email, or in-person solicitations. Criminals often send emails that steer recipients to bogus websites that appear to be affiliated with legitimate charitable causes. These sites frequently mimic the sites of or use names similar to legitimate charities or claim to be affiliated with legitimate charities in order to persuade you to send money or personal financial information that can be used to steal identities or financial resources. The IRS cautions people wishing to make disaster-related charitable donations to avoid scams by following these tips. Be sure to donate to recognized charities. Be wary of charities with names that are similar to familiar or nationally known organizations. Some phony charities use names or websites that sound or look like those of respected, legitimate organizations. As I mentioned earlier, the IRS website has a search feature, Exempt Organizations Select Check, through which you may find qualified charities. Donations to these charities may be tax deductible. Again, I'll include the link in the show notes. Now, don't give out personal financial information such as social security numbers or credit card and bank account numbers and passwords to anyone who solicits a contribution. Scam artists may use this information to steal your identity and money. Never give or send cash. For security and tax record purposes, contribute by check or credit card or another way that provides documentation of the donation. Consult IRS Publication 526, Charitable Contributions, available on irs.gov. This free booklet describes the tax rules that apply to making legitimate tax-deductible donations. Among other things, it also provides complete details on what records to keep. If you're looking for more information on tax schemes and scams, you can search the irs.gov website and use the keywords scams and schemes. If you're suspecting or looking to report fraud, visit Report Phishing for details on scams carried through email or websites. Now I want to share info on another way you can make charitable donations. If you are the age where you must take required minimum distributions, RMDs, from your investments, if you have a traditional IRA, you can receive tax advantages by making cash donations to an IRS-approved charity through your IRA. What are RMDs? These are the amounts of money that must be withdrawn from your traditional IRA. Each year, the account holder must withdraw the minimum amount based on the current requirement. Although the Secure Act changed the minimum age for required minimum distributions to age 73, those who are 70 and a half or older can transfer up to $100,000 per year to a charity and can avoid paying income taxes on the contribution. This process is known as Qualified Charitable Distributions, or QCDs, and is limited to IRAs. The funds that are donated to charity will count towards your required minimum distributions. However, they will not increase your adjusted gross income, AGI, or in other words, create a tax liability. Why is it important to keep your charitable contribution from being taxable income? One reason is because it helps you qualify for other tax breaks. You can also avoid certain rules that cause your Social Security benefits or all of your investment income to be taxed. Not only this, but you'll be able to avoid high income surcharge for Medicare Part B as well as Part D premiums. Lastly, your charity contributions won't be subject to federal estate tax and most likely won't be subject to state death taxes. If you are interested in benefiting from a QCD for the new year, you will need to arrange a distribution to be paid directly from your IRA account if you'd like to qualify by December 31st. QCDs are not deductible as charitable contributions on Schedule A, but are listed in a different area of your tax filing. But as with deductible contributions, you must get a written acknowledgement of your contribution from the charitable organization before filing your income tax return. If you have questions on how to go about making a charitable contribution from your IRA, speak to your investment advisor to assist you. So what if you love donating to charity, but you don't have cash right now to do so? Instead of feeling guilty for missing out on a donation, why not consider one of the following ways you can still give to nonprofits and receive charitable tax deductions? Donate stock. I'm sure you've donated food and clothing to a charity before, but did you know that you can also donate stock? Instead of selling appreciated stock and giving the earnings to a charitable organization, avoid paying capital gains taxes by donating the stock itself. As nonprofits don't have to pay capital gains tax, through gifting an appreciated stock to a charity, the entire value will be preserved while you avoid paying extra tax. Open a donor-advised fund. If you want to give multiple charities or you don't have a specific amount in mind, opening a donor-advised fund, DAF, is a great way to have money set aside for your donations and get tax deductions the same year. Simply choose a DAF sponsor, invest in one of their many pre-approved options, and then submit a grant request when you're ready to donate the money. Like all investments, however, there is risk involved as the value of your DAF can rise or fall with the economy, which is why it's often smarter to invest in low-risk opportunities if you're planning to withdraw the money sooner rather than later. Generally, a donor-advised fund is a separately identified fund or account that is maintained and operated by a Section 501c3 organization, which is called a sponsoring organization. Each account is composed of contributions made by individual donors. Once you make a contribution, the organization has legal control over it. However, you or your representative retain advisory privileges with respect to the distribution of funds and the investment of assets on the account. When you open a DAF, you receive an immediate deduction, regardless of when the charity receives the contribution. Create a charity budget. As the needs of nonprofit organizations are year-round, treating charitable donations like any other expense and budgeting them out accordingly can not only help support your favorite organization on a regular basis, but can also increase your yearly giving, thereby your yearly tax deductions. Narrow your options. While it can feel good to help as many organizations as possible, sometimes the most impact can be made by consolidating your funds into only a few select charities. This way, you're still spending the same amount, but can have the pleasure of seeing the donation go to better use than if you had stuck with the original fraction. Tracking contributions for income taxes is also easier. Want to make even more of an impact? Why not consider volunteering your time and getting involved with the nonprofit's mission? So aim for itemized tax deductions. If you're close to the standard deduction, why not consider increasing your charitable donations for the year? Chances are you'll receive a greater tax deduction by itemizing while also maximizing your giving to nonprofits struggling to survive. If you have any questions on how any of these deductions will affect your income tax, speak to your CPA who can help guide you when planning for you to make your donations, especially if it's one of high value. I hope you found this topic informative and will guide you as you make year-end donations. Remember, though, that organizations need your support throughout the year, so do what you can to help them at any time. Just be sure to get the documentation you need to back your claim and reduce your tax liability. Also remember that I will put links in the show notes for the Select Organization search tool and reporting any phishing messages you may have received. Please be as generous as you can when making your end-of-year donations and get a tax benefit at the same time. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.